Though storage has taken the limelight away from demand, but the two are absolutely linked up together because we are seeing storage tanks fill up due to a complete evaporation of demand from the markets. We saw another big build in U.S. stocks last week. We are estimating that overall U.S. commercial crude stocks are about 60% full. Storage at Cushing, which is the delivery point for the NYMEX WTI contract, are about 75% full. So you have very little storage left. It's already in the hands of traders and operators. So we could see a lot more volatility going towards the expiry of the next month contract. Global storage will probably be full by end May. Maybe it might stretch to June if OPEC Plus decides to really hunker down and get that compliance going and get that headline figure of cuts at least going. Right now what we're expecting is, though they've set close to 10 million barrels per day, compliance and other issues will mean it will be less than that. So overall, we are looking at storage getting absolutely full, and the reason for that is demand destruction. We have Indonesia coming out and saying that in this Ramadan month, there is a complete stoppage of travel. Indonesia is Asia's largest gasoline buyer, so you can only imagine what that means for gasoline demand. We are seeing, offers for crude not seeing any bids at all. I mean, there is a complete demand destruction going on. At Platts, we have further contracted our demand outlook for 2020, and this is just, the third or fourth revision that we've done. So as the lockdowns get extended, as, we're seeing that happen, we saw that happen in Singapore just recently, we're seeing that happen in India, in other parts of the world. This is a perfect storm brewing, and right. It's going to be a lot of pain for producers going forward.
Right. When it comes to the demand destruction side of things, you are suggesting that we could see 20 million barrels per day wiped out in the month of May alone. Will that require another policy response from the likes of OPEC, OPEC Plus, do you think?
There will certainly be a policy response because, like I said, as tanks fill up and there is further downward pressure on prices, there will be a production response. There will be more production cuts. The production cuts that we are seeing at the moment is nowhere close to what is required to balance the markets even going forward, right? So OPEC is already talking about possibly cutting further, going beyond the 9.7 billion barrels that they announced earlier this month. We will see production cuts out of the U.S., out of other non-OPEC producers, as well as this price pressure, as there is more pressure on prices.